Hello, it's ChewDog Charts. Now, there's nothing better than owning shares of an emerging company in the early stages of a big move. Recognizing when a stock is forming a bullish chart pattern that could yield more upside is a great skill to have. So today's topic is relatively interesting. I had a request from a friend of mine who wanted me to take a look at the theory that Investors Business Daily uses, which is their chart pattern or popular chart pattern called a cup and handle. He wanted me to take a look at a cup and handle and compare it to my method. So that's what we're going to do today. Let's take a look. So the request from my friend is relatively convenient because on November 24th of this year, an article from Investors Business Daily came out with an explanation of a cup and handle, and I've saved that, wanting to go over that at some time in the future, and so now appears to be the time to do it. So the chart that you're looking at on the screen is Applied Materials going back to prior to March 2015 up until September of 2017. And I'm simply going to read from the article. It says, it's not always chart patterns that yield ideal entry points in a stock. Downward sloping trend lines found by connecting a stock's recent highs can also yield actionable buy points that are often earlier than buy points in a classic base. When a stock breaks out over a trend line, in many cases, it's also breaking out of a downtrend. In many cases, stocks breaking out of downtrends will still be far off highs as opposed to stocks building bases which tend to be closer to new high ground. In hindsight, Applied Materials' strong price performance in recent months was in anticipation of improving fundamentals, and the semiconductor industry bellwether certainly has delivered in recent quarters. Over the past 5 quarters, year-over-year sales growth has ranged from about 20% to 45%. Earnings have jumped 41% to 158%. That's impressive for a company with a market cap north of $60 billion. And it's organic growth too, not fueled by recent acquisitions. The accompanying chart that you see on your screen shows how a trend line on a weekly chart can be used to identify an entry point. In this example, just 2 highs were connected, but there will be weekly charts where connecting 3 or 4 recent highs is easy to do. Applied Materials broke out over the trend line in late February 2016, just ahead of a breakout from a standard buy point of 1951 in the long base. It continues to show relative strength with 2 more breakouts. Trend lines can be drawn on daily or weekly charts. The best trend lines on a daily chart are found when at least a few recent highs can be connected over a time frame of at least several months. As Applied Materials showed, connecting a couple of recent highs on a weekly chart can also result in a clean trend line. Applied Materials' price performance remains impressive, even though its last breakout in late September this year was from a large stage base. Shares were volatile November 17th after the company delivered another strong quarter of growth, but after rising 5% intraday, sellers came into the stock. So a little bit further discussion of the article and the stock chart we're looking at here. As you can see, this is the cup. It's a large cup, and then this here is your handle. Now, the trend line is connected by this point up here, say in March 2015, all the way down to this point here in, say, February to March 2016, these 2 points in here. And the trigger or the buy line was started as soon as the price moved down and then popped and hit the trend line. Once it moves above the trend line, that is your buy point or your trigger. And we had multiple buy points, as you can see here. Another buy point. As soon as the stock moved up above this dashed line here, that was your next buy point, and then another handle with your third buy point. So now let's take a look at my charts. Now my chart here is a 10-year monthly chart. I like looking at the extended period of time. However, the similarities will be evident soon enough. All right, so what we had here, consistent with IBD, is your cup moving down through here, and then one handle here, and then another handle up there, and then the trend line moving through here. So this was your first buy point. Your next buy point was right here, and then your next buy point was right here. Once the handle moves down, once the price moves up above the top here, that's your buy point. So multiple buy points here. Looking at my chart, moving on down, how I look at it is through, first of all, the MACD. Here you have your cup moving like that. And in the MACD, one of my triggers would be for the fast line moving through the slow line or the trigger line here. Moving down, we see the cup and then the upward move, moving through the zero line at that point, consistent with IBD. As well, the momentum indicator too, relatively consistent with your cup, and then a move through the zero line. Moving down here into the price rate of change, we've got the cup, and then the move through. Cup's not as nice as before, but you get the idea. Now here we have a bottom in, say, late 2015. And the next bottom came here in early 2016. So you would have had an idea that things were improving there. And perhaps you have a stock that you want to look closer at once the fast line moved through the slow line here at this point. Getting a bit confusing there with all the signals, but again, you get the idea. Relative strength, you have your cup moving here, and then of course the move through the midline 50 line. The bottom at this point here, and then your next bottom here, which is higher. So higher lows. Your stochastic, you have the cup, which is a much deeper cup. Then you have the fast line bottoming here, moving through the slow line at this point. So this is going to give you an indication in late 2015 that you might have a decent stock to look at. Moving through here into the volume, not going to tell us much, but then the Williams is the same, perhaps as the stochastics with a deep cup. And then the move through the midline at this point here. Going back on up into the price chart, we'll take a look there. I'm going to toggle back to IBD's cup and handle. Again, here we have the cup with the handle, and then your multiple buy points here, here, and here, and then your trend line moving down like that. Toggling back to my chart, you see many similarities here of triggering a buy on this, for me, is quite similar to IBD's cup and handle. One more time through the momentum indicator, price rate of change, and the relative strength to the stochastic, and then lastly on to the Williams. So many similarities, a lot of points here that are going to give you a heads up at this point there that the stock's improving and perhaps something to look closer at and to do more study on the fundamentals. But overall, many, many similarities here. So before I sign off, I would like to say that please subscribe and hit the notification button for any new videos. So for now, that's ChewDog Charts. Thank you.